अस्सलाम वालेकुम, मेरा नाम उमर है और मैं एक रिसर्च एनालिस्ट हूँ चेस सिक्योरिटीज़ के साथ। आज हम बात करेंगे पैंथर टायर्स के बारे में। पैंथर टायर इज़ अ टायर मैन्युफैक्चरिंग कंपनी which produces tires for two-wheelers, three-wheelers, tractors, trucks, and buses. We like this company because of the following triggers. We believe that strong farm income will help drive the sales recovery. We also believe that with the economic recovery in place, we will see higher OEM sales for auto producers, which as a result will cause higher sales for Panther tires in the OEM segment. We also believe that monetary easing cycle will reduce finance costs for the company and help contribute to its bottom line growth. Other than this, Panther Tire is also greatly diversifying into exports, and we believe that this diversification of revenue streams will allow it to achieve stable and reliable revenue growth. We provide a target price of 54 rupees and 34 pesos. This is a buy stance with an upside of about 48%, along with 13% of dividend yield in the year 25. तो अगर हम ये देखने चलें कि मोटरसाइकिल टायर्स कितने बिकते हैं एक मुल्क के अंदर, तो उसके लिए सबसे रेलेवेंट चीज़ होगी कि हम देखें कि मोटरसाइकिल सेल्स दूसरे मुल्क में कैसी रही हैं अगेंस्ट जीडीपी पर कैपिटा ग्रोथ. So if you were to look at previous instances, we can see that GDP per capita, where it's below 3,000, there is sort of a proportional increase. As GDP per capita increases, so does motorcycle sales per million. In some cases, such as that of Indonesia, we can see that motorcycles sales per million also hit 30,000 at a GDP per capita of about $3,000 to $4,000. Similarly, Pakistan has seen motorcycle sales at about 8,500 per million of population in 2021. Total sales for that year were at 1.9 million units. However, due to the economic slowdown, we saw that this figure was only about 5,000 for the year 2023. So we can hope to see a recovery in demand along with population growth as sales start to recover in the coming years. If we were to look at higher income companies, we would see that this trend does not hold, because once the GDP per capita crosses a certain threshold, we assume that a car becomes a dearer good, as well as the fact that public transportation will be better for that country. If you were to talk about the industry as a whole, it's making great strides in terms of exports. Panther Tire and service industries have cumulatively contributed to exports by a very large amount. In fact, Panther Tire only used to export about $5 million worth of tires in 2020. And now in 2023, it exported $11.9 million worth of tires. Similarly, if we were to look at the total exports of tires and tubes for the fiscal year 24, in the first 11 months, the rise was 66% to $82 million for that period, compared to $49 million for the same period in the year before. As a result, with this exponential growth in exports, we see a very good environment for the companies to be able to grow their export earnings and diversify their revenue streams. So the tire market in Pakistan is dominated primarily by three local players. General Tire, which is the only player that produces passenger car tires. Then we have Panther Tire and Service Industries. The market is essentially split into two parts. There are OEM sales, and then there are replacement market sales. If you were talking about the tire market and its different segments, we would see that by and large, there is a lot of imported tires in the country, both those that come through legal channels as well as gray imports. So if you were to look at the two and three wheeler segment in Pakistan, especially motorcycles, rickshaws, if you were to look at these, we would see that 100% of demand is met through local production. This is an opportunity for the local manufacturers, because as we see motorcycle sales rebounding and the economic growth coming back to our country, we will see that motorcycle sales will increase. Similarly, we see a lot of gray channel imports that are taking over markets such as those for trucks and buses and tractors. However, we can see that local players are diversifying into this, and on top of that, you can also see Service Long March Tires and Panther Tires are also exporting these kinds of tires, indicating that these are competitive in the global environment. If we talk about the capacity for this sector, we can also see that players in the sector have consistently been adding capacity. Panther Tire has gone from a capacity of 8 million units to 9.8 million units. Additionally, if we see Service Long March Tires, we can see that they have had a capacity of 2.4 million units, and now they're hoping to double that to achieve an export target of $100 million for the next year. If you look at the industry's capacity utilization, we will see that capacity utilization was on an increasing trend until fiscal year 22. However, fiscal year 23 saw a lower capacity utilization, presumably because of aggregate demand being muted in the country for this year, as well as LC restrictions and other issues that led to a decreased demand in the sector. If one of those reasons would be the OEM sales. In tractors and two and three wheelers, we have seen lower sales than in previous years due to the economic slowdown. As we see this economic slowdown begin to fade and the country beginning to get back on the right track, we will also see that these sales will become to recover and help contribute to OEM sales for Panther Tire. Panther Tire's production also used to be higher 2 years ago, and now it is lower. So we can also assume that as the market normalizes and more inroads are made into exports, we will see that this production level starts to increase, capacity utilization starts to increase. We also believe that margins should be begin to grow, and as a result, we will see that the company starts to make more money. If you look at raw material prices, we can see that raw materials used to be much more expensive back in 2011. And even in recent times, we have seen a spike due to the commodity super cycle. However, the prices have begun to stabilize. If we talk about the raw materials that are used in tires, for the most part, it is rubber that is used. Two parts of rubber. One is technically specified rubber. It's a derivative of crude oil, and therefore its price by and large is susceptible to crude oil price volatility. Similarly, natural rubber, which is the second major ingredient in tires, is a volatile market because it is heavily influenced by Chinese demand for material. In the current year, the sector has experienced a historic slowdown in tire sales. Along with that, we have seen high energy costs and high finance costs lead to higher costs of production and impacting the bottom line of the company. We have begun to see a nascent recovery in demand for tires. We believe that along with currency stability and a nascent recovery in demand, the industry players will be able to manage their operations more effectively and focus on growth. If you were to talk about the factors influencing the sector's sales, we would see that inflation does deeply impact the sales for the sector, and interest rates also obviously impact sales for the sector because they will influence aggregate demand. We also believe that farmer income in the next few months in these past few months has been high, and moving forward, it should help revive demand for tractor tires as well as for motorcycles and three-wheelers. So if we were to talk about duty structure for this sector, we would see that the duty heavily favors local players, where we see tires in finished good form attracting duties of 3 to 20%. We can see that for the same raw materials such as natural rubber and synthetic rubber, it is a total duty of about 2%. So if we were to look towards Panther Tire's forecasted financials, what we would see is that the expected earnings per share for fiscal year 25 clocks in at about 7.65 rupees. Along with this, there is an expected dividend of 4.59 rupees. We expect that sales will increase to 38 billion, while the gross profit also reaches 5.8 billion. As a result of this, we will see profit after tax clock in at about 1.28 billion for the next year. So key risks to our thesis include if there is persistent inflation but stemming from elevated oil price or budgetary measures, we can expect that there will be higher raw material costs, which may cause delayed monetary easing, which will cause higher material costs, will cause their margins to contract, and delayed monetary easing can cause finance costs to remain elevated, which may impact profitability. In addition to that, we also believe that depreciation of the local currency can also lead to increased costs and working capital requirements, which may impact the company badly. And along with that, if there is not as much of a crackdown on smuggled tires, or if there is an increase in import duties for raw materials or a reduction in import duties for finished tires, we could see Panther Tires sales get impacted. We initiate a buy stance on Panther Tires with a June 2025 target price of 54 rupees and 34 pesos. This counts as a 36% capital gain and a 13% expected dividend yield for the next year, bringing your total expected return to 49%. Thank you for watching today, and we do hope that you like and share our video. Please subscribe to our channel, and we will see you again soon.